exchange or crypto which invest money as more profit able. Many people have been investing in the stock market for a long time. On the other hand, a new phenomenon has emerged, cryptocurrencies. With the emergence of Bitcoin in 2009, the world became acquainted with the digital currency and its underlying blockchain technology. In the crypto equation with stocks, equity investors initially dismissed cryptocurrencies as an extreme move. However, since then, the cryptocurrency markets have grown rapidly. However, this emerging innovative technology came with its controversy. While some experts expect the crypto market to act as a hedge against traditional financial markets, other experts fear that crypto could pull and possibly drag the broader market down with it. Regardless, the impact of digital currencies on financial markets is undeniable. Crypto trading has become like traditional stock trading as more investors add cryptocurrencies to their portfolios. According to CNBC research, at least 1 in 10 Americans is currently investing in crypto. In Asia, this rate is higher. 1 in 5 people in China invest in cryptocurrencies. According to research by the World Economic Forum, the United States ranks first in the world with 78% among 74 countries in terms of the number of people who trade crypto. Trading digital assets, it has made investing easier than ever before. Relatively higher volatility means more potential opportunities. Combine this with round-the-clock trading, leverage trading, low transaction fees, and other conveniences, and it soon becomes clear why so many new investors and seasoned stock traders are starting to switch to crypto. In this video, we will try to reveal the similarities, differences, pros and cons of crypto and stock investing. If you want to buy cryptocurrencies, it is like buying because buyers are matched with digital asset sellers. Price is determined by supply and demand. Transactions can similarly be made online, and both investments can pave the way for wealth or poverty early. Cryptocurrencies and stocks work similarly. If you have traded stocks or forex, you will not feel alien in front of the familiar interface of any cryptocurrency exchange. When doing fundamental analysis for a cryptocurrency coin or token, the crypto market differs from the traditional stock market. However, in terms of basic trading understanding and technical analysis, the two markets are almost the same. For example, you can send similar types of orders to exchanges in both markets. Market orders are bought or sold at the current market price. Limit orders allow you to trade at a specific price to be bought or sold. Just like in the stock market, with a stop-loss order, if the crypto money price falls below a certain price, it switches to the automatic sell process and major losses are prevented. The stock market closes after a certain hour, but cryptocurrency markets never close. For day traders, market volatility and high liquidity are an advantage for profitable trading. Many cryptocurrencies also provide these two features. Gains of over 1% in a few weeks are not unheard of in the crypto markets. Given the temptation of short-term profits, investors are entering the cryptocurrency world when weighing cryptocurrencies in stocks. However, it is useful to remember that there are great risks in crypto markets as well as great returns. Because cryptocurrencies have very bumpy price movements, many experts see crypto transactions as gambling rather than real investment. Stocks do not have such price volatility. Liquidity is the ability to buy and sell whenever you want in any market. Equity markets have higher trading volumes than crypto markets and are therefore more liquid. In this respect, the advantage is in the stock markets. Relatively, there are fewer investors in the crypto market and therefore there is a possibility of liquidity problems. However, there are differences in liquidity compared to cryptocurrencies. Bitcoin is the most liquid digital currency as it has a high number of sellers willing to trade and first, low market capitalization coins, tokens, and smaller cryptocurrency exchanges normally cause liquidity problems for large investors, making them less preferred and invested. In the stock market, this situation is only seen in small stocks with low capital. The similarity between crypto and stocks is that they are both volatile. It is almost impossible to buy or sell at the right time due to price fluctuations that are difficult to predict. However, since it is possible to access company balance sheets in the stock market investors can give their trading criteria based on this information. In addition, the stock market has shown a growth trend in the long run. Stock markets fluctuate only during certain hours of a business day. Cryptocurrency markets never close and fluctuate according to other digital assets, events in the crypto space, and the movement of global exchanges. With its wide spectrum of influence available 24 hours a day, cryptocurrencies experience more volatility than stocks. More market volatility means less stability in price, which may discourage institutional investors from participating in crypto. This also gives traders, i.e., frequent traders, more opportunities to trade. The purpose of diversification is to hold assets that perform differently in different markets. By diversifying, you protect against high risk in your portfolio. Because stocks have a higher dependence on the economy, they offer less diversification compared to shards. Factors such as inflation, monetary and economic policies have a great impact on stocks and bonds. Bitcoin and Ethereum's low correlation with equities makes cryptocurrency investing an attractive strategy to use for portfolio diversification. Other cryptocurrencies are also mostly indexed to stable cryptocurrencies such as Bitcoin and Ethereum. Stocks, on the other hand, react to broad economic factors, the individual performance of companies and sectors, and the interconnected supply and demand of related indices, industries, and services. Cryptocurrencies cause huge gains and huge losses in the short term. Your dreams can also come true, your hopes can also tell. Considering that the average return on very volatile exchanges is around 10% per year, investors are attracted by Bitcoin being the best performing asset with an annual return of 230% over the past 10 years. But keep in mind that the price of digital assets can either go to the moon within hours or collapse within minutes. In this sense, it would be naive to expect a constant return on all your transactions here. These high-volatility cryptocurrencies, which also exist in digital assets, have made it a frequent destination for daily trends that want to make an instant profit. The stability inherent in stocks is an important factor that attracts many long-term investors. When you look at the long-term return performance of stocks, you see that it beats many other investment vehicles. On the other hand, it is important to remember that crypto markets are facing cybersecurity threats, as well as the high volatility risk. The fact that the regulations to regulate this market have not yet been fully realized, they have not been adopted by large masses. Despite these risks, crypto can be beneficial if you make an effort to understand the market and be careful. The fact that the returns or the attitude is due to these existing risks, whether it's crypto or the stock market. Choosing a long-term and stable path is undoubtedly the wisest path. It is best to avoid short-term volatility in either market, especially if you're not a day trader who has spent years in these markets. When comparing crypto to stocks, deciding which to buy and which to sell depends largely on your expertise, trading strategy, and the amount of money you invest. Stocks are better for those seeking predictable, limited investment growth over the long term with relatively low volatility. At the same time, stock markets are regulated by law and strictly monitored. Diversifying cryptocurrencies would probably be better for those looking to hedge against inflation and factors that negatively impact financial markets. Considering the situation of foreign exchange in our country, the presence of dollar-based investment is a plus element by cryptocurrencies. There is no rule that states that you should only invest your money in cryptocurrency or just stocks. Instead, you can invest in both at the same time. However, investing in each for different purposes can be a technique you can apply. For example, if you want to increase your retirement wealth, you can also use cryptocurrencies if you want to reach a short-term goal such as having your preference in stocks, taking a vacation, buying a new phone. Both cryptocurrencies and stocks can help you increase your wealth. Each option comes with its own risks. It's important to do your research before diving in.